You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN E-Mini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN E-Mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-Mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Thursday, 10th day of October, 2019. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. Let me put up a chart. The S&P 500 E-Mini Futures. Let's do daily. How about that? I'll take the fibs off. And even this, because I want to reconstruct it with you as you watch. Now, if you can't see the chart, go to our homepage at cfrn.net. On the right-hand side, click that big microphone, follow the instructions. In about 30 seconds, you'll be registered. That's going to give you one-click access to the show each and every day. On the days you're out of the office, away from your desktop, just point any internet-connected browser to youtube.com/CFRN/live, And there you will find a live, real-time simulcast of the show as it unfolds, brought to you by the good folks at YouTube. Thanks, YouTube. Okay, S&P 500 daily chart. This arrow pointing down does not reflect what the market's currently doing, does it? So let's talk about what we've been talking about. Okay, we had this big sell-off back in July. It began July 30th and it ended on August the 6th. So then we went from support to resistance, back to support, back to resistance, back to support, back to resistance, and here's where the dynamic changed. We did not go all the way back to support. Buyers came in right here Now, what does this have to do with this? Oh, just everything. But we'll get into that later. Buyers come in. We now have new support, which is old resistance, yeah. Pushes us up through this resistance. We failed to put in a new all-time historic high. The all-time historic high is right there. Didn't quite make it. Got a little double top going here. You could call it a triple top. Some might see it as a quadruple top. Whatever. Down we come. We hit this area that was resistance, 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 and lo and behold, it becomes support. We bounce about 40 points. Sellers push it back down into that area again. This time they succeed in pushing it through. Buyers step in here. Why here? We'll get to that. Buyers push it back up into this same area of resistance. Remember, important prices, important areas are almost always tested on a daily chart, on a weekly chart, on a 1-minute chart, on a 30-minute chart, on a range chart, on a volume chart. No matter what market you're looking at, no matter what time frame you're using, the clock on the wall is always price. Now, buyers step back in here because why? Well, this one is easily explained. We have a new area. Come on. We have a new area. I think what we need is a new computer, but I digress. Come on. Let me draw a little rectangle. It's just us. Come on. There it goes. Let me get this circle out of the way for now. I'm sorry, the ellipse. Okay. You go, well, isn't that just kind of the same as this? Very good. Okay. Yeah, we spiked it a little bit. Buyers come in, run it back up into resistance. Sellers take the ball back down the field into this new support area. They fumble the ball. Buyers scoop it up and make a dash right back up into this area of resistance. Okay, we better extend that baby out a little bit more. There we go. Okay. So, critical point. We talked about this yesterday. We talked about the two scenarios that could unfold. One being, remember I went leg, retrace, leg, or is it leg, retrace, leg? Yeah, you would, right? I can sit here all day, that phone won't ring until I get on the radio. So really we deserve another arrow here, okay? So, now somebody just said, oh, wait, he's so clever. He just said it could either go up or go down. You move to the head of the class because you're right. That's exactly what I said. It's exactly what I meant. And I don't care how complicated and how convoluted all these vendors try to make it with their magical indicators and mystical oscillators and secrets found in an urn in a cave in the Gobi Desert. Bottom line, price is either going up or going down. It may waddle sideways for a bit, but ultimately, look at any historical chart of any market since its inception. Over time, price goes higher. Every chart you look at, if you look at a historical chart all the way back to the inception of that market, it's going to start in the lower left-hand corner of the screen, of the chart, up to the upper right-hand corner. That little tidbit right there, which now that I said it, you go like, well, duh, okay, yeah, well, that's really valuable. Some of the duh stuff we stumble across is so valuable. Nobody ever notices it. They just walk right past it. They're so busy digging for gold, they don't see the big nugget that they've propped their lunchbox up on to eat lunch. True story. All right. So, now that I've revealed the secret of the universe, price is either going higher or lower, let's get real. That is real, but... So what has to happen here? Price has to overcome this obstacle. Resistance, 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 resistance. It's got to overcome that. And then I want to see it hold on a pullback. And then that validates this arrow. However, if this in fact becomes good resistance again, like it was here and here and here and here, and yes, even here, that'll validate this arrow. Okay? Now, I understand that seems very simplistic, very elementary, if you will. Well, this is all simple by design. It took a lot of hard work, a lot of time, a lot of treasure to simplify this thing. Except once we arrived at simple, we realized simple had been there all along. We just had to get all the stuff out of the way so we could see simple and be simple and trade simple. Okay. We break above this area, we hold it on a pullback. Now the door is open to go challenge this high and even the all-time historic high. If we find good resistance here, the market will turn down. We'll come back into this area of good support, which will either hold or it won't. If it doesn't hold, we'll take out this swing low and come back into this area of support, which has been good support since August the 5th. That's what's going to happen. There are very few absolutes in the world of trading, but I absolutely positively promise you one of those two scenarios will unfold. I'm not pulling your leg. Now, let's look at a 30-minute chart real quick. Okay, this is daily. I'm going to go to the S&P on the 30-minute. Yesterday, you and I were having a conversation about this time right here. Let's see. Probably about right here, right? And I handed out one of my absolutes yesterday. I said, there are very few absolutes in the world of trading, but I absolutely positively assure you that by the time we speak again tomorrow, that's the day, price will have either found its way up to this zone above us or the zone below us. That's very simplistic, very elementary, but look what happened. We didn't get all the way to the zone on this move. We got there on this move, And now we've got, I didn't say we'll visit both, but because we were kind of stalling, rolling sideways, and remember, sideways only lasts for a season. So there was two-sided action. We almost touched the zone there. Zones are an area. Came back, consolidated, hit the zone below. Right back up to the zone, right back down, right back up. Consolidation for, goodness, this consolidation started in earnest at 2200 hours last evening. For you non-military folk, that's 10 p.m. Eastern. And we didn't break out of that until this morning at the Wall Street Open. Overnight, Globex trading. It's nice. Very few people are even aware of it. You know, I mean, they kind of know it's there, but for them, it's not really a thing. For us, it's very much a thing. It used to be back in the day, Globex was a shadow market. Yeah, you know, it was there, but it had no far-reaching ramifications. Certainly, major market moves did not begin or end on Globex. No longer the case. Go look at your charts. Quite often, major market moves, major turning points happen on the Globex session. Last night, we just had the dreaded sideways roll. In a minute, I'm going to turn them all off, okay? So we won't be bothered for a while. Okay, so we rolled sideways from 10 o'clock last night to 9:30 this morning. It's almost 12 hours, half a session. More than half. No, yeah, whatever. Do the math. Now, after all of this consolidation, this is price making up its mind what it's going to do. All of our traders this morning, well, let me back up. When this happened, all of our traders instinctively knew, those who've been with us more than a few weeks, instinctively knew that price was trying to get to this zone below. And then after this consolidation, they instinctively knew when price made up its mind and had decided on a destination. Now, when the market decides on a destination, it doesn't mean it's going to get there 100% of the time, as evidenced here. Price clearly trying to get to that zone overhead. Oh, did I mention? Price is always trying to get to a weekly trading zone. From the Sunday night Globex Open at 6 p.m. Eastern till Friday afternoon at 5 p.m. Eastern, price is trying to get to a zone. Sometimes it nails it. Sometimes it comes a little bit shy. Sometimes it'll spike it a little bit. Doesn't change the fact this is a market on a mission. Now, this framework that you see on my chart, these zones, as we call them, these numbers are provided to our traders every Monday morning, 6:15 a.m. Eastern. This way, everybody has plenty of time to get them on their chart before Wall Street even wakes up on Monday morning. Our traders are ready to go. It's been said our traders get more points by 9 a.m. than some traders get all day. All right. So, if they knew this was coming, and if they knew that was coming, it seems like some pretty profitable information, right? Knowledge of great value. I'm trying to tell you that we know what's going to happen next? I'm not, because we don't. We may be the only e-mini training organization on the planet that readily, openly admits we don't know what's going to happen next. Apparently everybody else does, because I've been to the websites, I get the emails just like you. They all say, hey, we got the crystal balls, we got the magic. We don't have any magic. See, the problem I have with this whole business of trying to know the future is it runs contrary to what I read in this great book. One of the chapters in that book is called Genesis. God made a man called Adam. And when God created Adam, he did not put in the ability to change the past or know the future. And those two are inextricably linked for eternity. So everybody says, well, if you don't know what's going to happen next, what good are you? While we readily admit we don't know what will happen next, nor does anyone else, what we do know is what the next high probability move is. As evidenced by this, and this, and this, and all this. Okay? All right. Let's do this. Oh, what's price trying to do right now? Think about it. Here, let me give you a let me give you a tool, an aid, a clarifier. Now, what I'm about to show you does not predict the future, but it helps you understand what the market's doing and what the next high probability move is. Okay. Price is above this weekly trading zone. Price is above the BBC. What does that mean? BBC just means bull, bear, cross. Okay. When price is below that green line, we're looking for lower prices. And then when price gets above it, we're looking for higher prices. Very elementary, I understand. Simple by design. So, right now, since price is above this zone and above the BBC, well, that means that the market is trying to get to the zone overhead, right? It was. It was here, 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 here. So what's this? This is price pulling back, reverting to the mean. Now, price always reverts to the mean, and in our case, the mean is the BBC, the green line. Oh, it just so happens to be hanging out at this concierge trade alert from last night, 29.25. So we had a leg and a retracement, very shallow retracement. These are 30-minute candles. Then another leg. Now we're having a retracement. So big picture, yes, price is trying to get to the zone overhead, but price rarely travels in a straight line. Every now and then you get one of these, but for the most part, it's leg, retrace, leg, retrace, leg, retrace, leg, retrace, see? So, right now, price is trying to get back to this weekly trading zone. It's either going to confirm it to be good support or not, okay? Really what it's hankering to do is to meet up with this. Now, this could drop like a rock and connect, or we could wobble sideways a bit. In the most perfect world, the one which you and I don't inhabit, this would arrive here just about the time price arrives here. Now, when price approaches a weekly trading zone from above, we expect it to be good support until it isn't. And when price approaches the BBC from above, we also expect that to be good support. So in that perfect world I spoke of, if price winds up here at about the same time the BBC winds up here, we would then expect it to be good support 2x. That opens the door. If we find good support on this pullback, price will then continue on its journey to this zone overhead, but it now will have an obstacle in its path that it must overcome to complete the bigger picture mission. Okay? So let's say that in this perfect world, price ends up here, the BBC ends up here, buyers come in, they support it, off we go. We're building a leg. Expect potential resistance here, but if we can get above that, hold it on a pullback, then it's almost like a walk in the park, up to 65, 66. That's how I see it. That's my narrative. If you want to learn to see it that way, think about it that way, and execute this way, the journey begins at eminitrainingschool.com. That's where you'll find me. That's where you'll find Michael and Valerie and all the gang. We got some great traders. And by great, they're not all professionally trading for a living yet. Not all of them, no. But man, they're nice people. If you've ever been in some of these message boards and chat rooms, and some of them are just vile. So much anger and resentment and bitterness, and it's just not a good environment. If you're trying to learn to do something, I don't care what it is, if you're learning how to whittle a corncob pipe, you get the picture, right? We talked about this yesterday, and I put out a post, and I think even a video on it. It's so important that you surround yourself with people in all areas of life that have similar goals, but also who are going to speak words of life into your life. The world has so much negativity and criticism and chaos going on. That's not a good environment for success. And I'm sure that's what you want out of this whole trading business, this trading venture, this journey that you're on. You want some positive, consistent success. We all do. What you allow to rent space in your head is very important. Garbage in, garbage out. If you eat junk food all day, how long will you hang on to your health? Not long. If you eat a healthy diet and get plenty of exercise, doesn't mean you're going to live forever. But whatever life you have left, you can have what's called quality of life. So if you want to be miserable, hang around miserable people. If you want to be successful, hang around successful people. Elementary, simplistic, yes, by design. Okay, let's go look at the numbers from around the world. Cash markets, starting here in the U.S., then we'll go to Michael, get a recap of what happened in the live training room this morning. Currently, the Dow is up 160 points. NASDAQ is up 43. S&P 500 is up 20. And the Russell 2000 is up almost 8. No movers, no shakers. In the commodity basket, crude oil up 75 cents, trading 53.34 last. That's a gain of about 1.5%. Gold taking a breather, down $11, trading 15.0180 last. In the Asian markets, at the close, the Nikkei was up 95 points, Shanghai was up 22, and the Hang Seng was up 25. And in European markets at the close, FTSE up 19, DAX up 69, and the CAC also up 69. And for the CAC, that's a gain of about 1.25%. That gives us a green day in Asia, a green day in the UK, and so far, it's a big green Radio Thursday here in the US of A. We'll be talking with Dr. Tom today. It's Dr. Tom Day every Thursday. We'll be talking to John. We'll be going over all the concierge trade alerts, the Logic 247 alerts, all that and answers to your questions when we come back. But for now, Michael, take it away.
Okay, I got this. All right. Come over here. There it is.
Okay, I've got it, and I'll do my very, very best to be here when you're done.
Okay, great. Here we go. All right. Good afternoon, everyone. Today is Thursday, the 10th day of October, 2019. If you've not taken a free trial with us, go to the homepage at cfrn.net. Right over here in the right-hand column, it says 5-day free trial. Apply.cfrn.net. Click on that, and you will be brought to this page, eminitrainingschool.com. Now, you can go directly to this page if you want to, but either way, you're going to have to fill out this little thing right here. Where all we ask for is your name, your email, and your phone number. Hit register now, and you'll be sent a confirmation link. You must click on the confirmation link. Okay? If you don't click the confirmation link, we don't know that you took the free trial. So you got to click that confirmation link. All right? All right. Results. Everybody wants results. Here we go. Today, as I said, is the 10th day of October, 2019. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Okay. Today, we made 4 ticks in the euro. We made 5 ticks in crude, 2 ticks in gold, and 8 ticks on the ES. Put us at plus 195 this morning. Today it took 5 minutes and 1 trade to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 7 opportunities this morning. So on the month now, we're up $937. That's over 8 days, averaging $117 per day. On the year, we're at $29,368. That's over 183 days, averaging $160 per day. $160 per day. Okay, that's 1 contract, 2 hours per day. Now, get this back. Hang on a second. Okay. All right. Scrolling. This was gold this morning. It started out really choppy. You know, it was a very slow grind down. Fortunately, we didn't get any trade setups in there. Once it finally had a nice move down, we had a break-even trade right there, and then we picked up 2 ticks on that one right there. Then it got choppy again, and we just didn't have any trade setups in there. Didn't get any trade setups until way over here. All right, and then it put in a new low right here. Turned around, started moving up, but we couldn't do anything in here. No, we couldn't do anything in there. And if you're looking at the slingshot down here, you'll see that, well, it was keeping us out of the trades, and we needed to have a trend. Step 1 is make sure you have a trend. Okay, like right now, it's trending right now. It's got higher highs and higher lows. So right in here was a long trade. That was during the break, though. But there was a long opportunity right here. It would have been a break even, but nevertheless, it was a long opportunity. The euro, we finally had our first couple of trades on the euro this week. It started out going nowhere, just really choppy and sideways. Then it started a downtrend right over here. So once we had the trend, we could start looking for trades. We picked up a couple of ticks there and a couple of ticks there. And then it changed directions and didn't give us a trade setup. Now, you could argue that you could go long on this close above the MA1 right there, but we hadn't broken dynamic resistance yet. That's why I wouldn't call that a trade. Okay, dynamic resistance are these red dots. And the rule is you can go long into dynamic resistance if it's not a momentum trade, or if dynamic resistance has been broken, but it hadn't been broken and it was a momentum trade. So that's why that's not a trade. Next, we'll go to crude oil. What do we do with crude? Yeah, we just had that one trade with crude. Crude was really choppy this morning. Not given any trend, not given any opportunity. This was, I was explaining in the room this morning how this right here was not a short because it wasn't trending yet, but that established a trend. So this right here was our first short with the trend. We picked up 5 ticks on that. During the break, looks like it bounced off the BBC right here for about 10 ticks, and then it would have closed above this trend line right here. Now, dynamic resistance was broken right here by this bar. So it's okay to take a momentum trade then. And that's what we would have had right here, was a momentum trade there for that leg up. It did change directions, but we didn't get step 3. Step 1, make sure you have a trend. Step 2, MA1 crosses the BBC. Step 3, price pulls away from the BBC. We didn't get that until over here. So this is where the short trade would have been, right in here. But by that time, we hadn't completed the trend. Right now, what I would be looking at would be a down close above the MA1 would be a shorting opportunity. A down close below the MA1 would not. Okay. And that was our day on crude. We ended with +5. Just one trade, +5 on crude. Wow. Okay, with the ES, we started out the morning. The ES, our first trade of the day was this one. This bounced off the BBC right here. And we picked up 8 ticks on that. And then we missed a bounce off the BBC right here that worked out. Looks like a momentum long trade right here. Now, this could have been going into the high of the day, and that's possibly why I was not looking at it. But another one here. Another one there. And we're going to break even right over here. And then during the break, it consolidated a lot right here. And then it just decided to crash. There was a shorting opportunity right here. And a follow-up one right there to get into that move down. We ended with +8 today on the ES. And John, I will answer your question in just a minute. Back to this. Hold on. Okay. Today, as I said, if you're going to read the spreadsheet, you could read all the CFTC risk disclosures down at the bottom. Today is the 10th day of October, 2019. And today we made 4 ticks. 4 ticks on the euro, 5 ticks on crude, 2 ticks on gold, and 8 ticks on the ES. Put us at +195 on the morning session. Today took 5 minutes and 1 trade to get the goal for the day. At that point, we're at $100 contract, and we took a total of 7 trades. On the month now, we're up $937. That's over 8 days, averaging $117 per day. On the year, we're at $29,368. That's over 183 days, averaging $160 per day. Again, that's one contract, 2 hours per day. One contract, 2 hours per day. Okay. If you have not taken a free trial with us, go to the home page here at CFRN.net. Right over here in the right-hand column, it says apply.cfrn.net. Let me reload this page. And then go here. Scroll all the way down to the bottom. Yay, it's fixed. Okay. Yeah, go to the home page at CFRN.net. In the right-hand column, it says 5-day free trial, apply.cfrn.net. If you click on that, you will be brought to this page where all we ask for is your name, your email, and your phone number. Click on register now, and you'll be sent a free trial. You'll be sent a confirmation link. You must click on the confirmation link, okay? Because if you don't click the confirmation link, we don't know that you took the free trial. So make sure you click that confirmation link, okay? Okay. And with that, we can wrap it up and pass it back out to fabulous Phoenix, Arizona, in Studio A overlooking South Mountain, America's largest city park. Dwayne, if you are ready. Okay, Dwayne must not be ready yet. I'm sure he's nearby, but okay. Let me search that one up. Seems okay. Okay. All right, so right now we need to put in a lower swing on a crude oil. We haven't done that yet. The gold. Oh, that's what that was about. That was weird. The gold, it's got bullish separation, but the cycle's going down really steep. It looks like it wants to change directions right here. And it probably will. Usually when the ES is going down, the gold's going to be going up. And that's pretty much what was happening there during the break. And the euro, yeah, the euro went up during the break too. Okay, so gold and the euro usually go in the same direction. And the ES usually goes opposite their direction. Usually. There are no guarantees. All right. Does anybody have any questions? John, I will respond to your text. Yeah, you did.
Michael, I'm in the process of doing that.
Okay. CC me on it. Oh, okay. Go ahead. The recap of the recap. Today, it took 5 minutes and 1 trade to get to $100 per contract.
Love a good bingo. All right. Okay. And we had one bit of news today. What was it again? We talked about it in the room.
Core PPI, I think. Was it PPI or CPI? Hang on. Let me go look.
And folks, we have no high impact news tomorrow at all. We got nothing high impact coming out of China Sunday night. So doesn't mean we won't have a good Sunday night. It just means whatever it is, it won't be economic scheduled economic report driven. It could be a tweet. It could be any number of things. Well, we'll deal with Sunday night when it gets here because we still got today and we still got tomorrow. So let me grab these charts.
Okay. It was CPI and core CPI and unemployment claims. So
very good.
The CPI and core CPI came out lower than expected. The unemployment claims also came out lower than expected, but the first two being lower is bad news, and the last one being lower is good news.
And all that has led the market. Here's the opening, here's the Wall Street opening candle right here. Now, what you see right here, guys, on Globex last night, that's what Globex kind of used to look like all the time. It was sort of a non-event. But somewhere between 2005 and now, that dynamic really did change. Major market moves now are as likely to begin or end on Globex just the same as it used to always be, you know, during the Wall Street day session. Price has pulled back, as we talked about a few moments ago, to the weekly trading zone. Found support so far. Right there, what you see now, this candle has 12 minutes left in its lifespan. We touched the zone and we were immediately rejected. That's what that little wick tells us. Now, the BBC hasn't had time to work its way up to the zone, which begs the question, will this be sufficient, or will this roll sideways waiting for the BBC to play catch up, and then once it catches up, then the next leg begins, which of course, if all that comes together. Now, could this take off without the BBC? Sure, absolutely. We've already pulled back to the weekly trading zone, and that alone, we expect that to be good support till it isn't. Okay, so give me, you know, maybe 2-3 sideways candles here, 30-minute candles. And that would probably be enough time for the BBC to work its way up. But that may not be what unfolds. So here's how I see it. Okay, here's my narrative for this. If price takes off without the support of the BBC, that's just what we call a shallow pullback. In fact, let me throw a fib up there real quick. We'll go from this low to this high. This pullback that we just saw to the weekly trading zone is a 38% Fibonacci retracement. Is that a deep enough pullback to give us another leg to the upside? Without the support of the BBC, yeah, it is. But we have this obstacle overhead, which if we launch the move from here, I think there's a greater possibility or probability that we struggle getting through this area. A little bit of sideways. See, sometimes sideways can actually be a good thing. My preference would be to let it just go sideways here for an hour or two. Let the BBC catch up. Then we launch, and maybe we don't struggle quite as much here. So rather than put on a long trade right here, I would prefer to, again, wait, as I just outlined. But what if price just takes off? What if buyers come in? Now remember, it's order flow that moves the market. It takes more buyers than sellers for price to go higher. It takes financial commitment for prices to go higher. So I'm not interested in this move here. If we take off before price and the BBC meet up, I would want to be involved here. Overhead at 65/66, we expect that to be good resistance till it isn't. So let's let this play out. We'll keep an eye on it throughout the show. It is Thursday, busy day, Dr. Tom day. And has anybody seen John yet?
Let me check one more time. He wasn't there a minute ago. Nope, he's still not there.
Okay, all right, that's fine. Well, that gives me a few minutes before Dr. Tom shows up.
Okay.
Let's take a look, guys, at... was there anything else you wanted to throw in there, Michael? Oh, we got Partners Workshop tonight.
Yeah, Partners meeting tonight, 9 p.m. Eastern. And I don't know if Bert's going to do one this afternoon. He didn't post a link this morning, so I don't know for sure if he's going to be doing it.
Hey, did you get the latest iOS update on your phone?
I did not.
You can create your own emoji.
Really?
You get to pick the face and the color of your skin, and your facial hair, and your hairstyle, and the color of your eye. It's fun for a minute. So, anyway, yeah, I'll send you mine here when my phone finishes charging. Okay, last night, Concierge Trade Alerts, guys. Let me run through those as much as I can until John or Dr. Tom shows up. Logic 247 wise, Valerie did send
John
me...
just popped in.
Okay. Valerie did send me a recap. So I'll give you these numbers. We'll talk to John, then we'll talk to Dr. Tom, and then I'll go through every one of the Concierge Trade Alerts with you and the Logic. So far this week on Logic, week 62, here we go. Up through 11:30 a.m. Eastern today, there have been 55 actionable alerts. 9 of them have been stopped out, which means 16% of all alerts this week, actionable alerts, have been stopped out. What we've averaged over the last 62 weeks, 61 weeks, 62, is 20%. Okay? So, with that, let's go to John. John, welcome to the show.
Hi there.
Good to have you with us.
Yeah, thanks. There's a lot of stuff going on today. You know, this sell-off yesterday afternoon, which was kind of nipped in the bud, and if you could squeeze it up a little bit so we can see a bit more data from the last couple of days. I would have to say it's fairly constructive, given the recovery so far, and it's starting to look like the S&P wants to go through 3,000 real bad fairly soon. I mean, this recovery of this sell-off last night was pretty unusual.
Here's a daily glance at that, John. As soon as my chart loads up, there we go.
Yeah, it's an overwhelming day. I mean, it's an outside day.
It is. I didn't think about that. You're right.
Yeah, and once again, you know, we're sort of locked and loaded, to use a Trump expression here. It really, this has kind of changed the entire picture rather dramatically, to tell you the truth. And you know, it's actually potentially fairly dynamic. If you look at the tests back in, and remember this was the first correction we had off the January or December-January low, sort of rocket ride right up to the beginning of May, had a 1 month pullback, and then the market went to new highs. I think you could call that a B wave. Possibly these recent corrections are failed C waves, and August, the mid-August could, because remember that was the Montana meeting, Wyoming meeting,
Jackson Hole, right?
Right, and you know that. Look at what that did. Right after that, there was a big rally. Remember, 2 years ago, the market bottomed in late August, and then went on a real rocket ride into January. I think we're starting. You know, while we've had, you know, this is a B wave here and possibly another failed C, or this was an impulse wave and this is a 1-2. You know, the third wave could be about to unfold now to the upside, which would be very dramatic because this would be a third of a fifth. We talked about that before. We actually, you know, I think there could be a really powerful upside move here very soon. You know, I just happened to catch a clip by Ken Fisher, who I know personally. I've met him a few times, and he was being asked by the crew on Fox Bulls and Bears about you know, the debt issue, and he made an interesting point that I didn't really had not factored in. Relatively speaking, the debt today, the debt maintenance, is half of what it was back in the 80s and 90s, and that's a very interesting.
Okay, say that again now. I want to make sure I get it.
We're paying about 200, I think 300 billion a year, something like that, in debt service on the 22 trillion, which is 22.5 trillion. Remember, 22.5 trillion. I mean, 350 billion is actually a pretty low number in terms of sustaining the debt. And what he says, it's all about the ability to pay the debt, which the U.S. has never failed on, and secondly, it's about the assets behind the debt, which the U.S. has probably 100 trillion in assets or more. So it's really, the debt is not that big of a deal.
You know what I think our greatest asset is?
The people.
Americans. That's right. You got it. Nailed it.
Yeah. It's not just the people, it's the atmosphere.
And not speaking ill of any other person from any other country. I don't mean that. And I'm sure that you feel the same way about your own country. So please go ahead, John.
Well, the thing is, Dwayne, whether it's the UK, I mean, the UK has sort of gotten the American bug, if you like, and a lot of other countries have got it. Remember, the US has had this incredible, from the 50s, 60s, 70s, they've had this sort of invincibility about business, and it's hard work, and the harder you work, the luckier you get, the more money you make, and you don't have to be the brightest, head in the universe to make money in the States. You just got to come up with a good idea and then execute. Right. And a lot of fairly dumb people made an awful lot of money. But the zeal, if you like, the work ethic and the zeal and the hard working. I can't think of the right word right now to personify what it means to grow up in America and be infected with the capitalist bug.
Entrepreneurial zeal.
Zeal, exactly. But you go to Dubai, and they got it over there, and what they've done in Dubai is nothing short of phenomenal. I mean, you got a lot of expats living there who are making fortunes in all kinds of different things. So, it's a much more competitive world today, and your biggest competitor is China. The China's catching that same thing and has caught it for 30 years now in a near unstoppable way. So it's a lot more competitive. But going back to the debt, the risk of something going wrong. Actually, what this Ken Fisher was saying is that the Fed should get rid of a lot of its old debt and refinance while the interest rates are low, which I guess they're doing anyway. But there will come a shock. And by the way, one of the things that's going on today, which you might have overlooked, you probably didn't overlook, you probably traded it, but the bonds are going down again. Which near the lows of the recent month or two.
I'll bring up a bond chart while you're talking.
which means that the market that's another reason why the market could take off here. Something pretty dramatic's happening over in England today because the pound is up massively. It's up from 22.5 to 24.5 almost. That haven't had a 2-point move in the pound like that for a long time. So it probably means they're gonna have some sort of a deal with this Brexit, which could and that could be the beginning of the dollar coming down. So look at that. Could you bring a little bit more?
I can. Let me just drag this up for 1 second, and then I'll change it. So last night we said to consider being short the bonds at 163.19. 163.
Great trade. That's an awesome trade.
And so I was a little late getting them out last night, so it's going to be a trade.
Yeah, I saw it come in at around after midnight.
Yeah, right? We went to we had to go to a thing last night, but so from 163.19, guys, down to 162.19. That's $1,000 per contract traded. There's 32 ticks to a point, and it pays $31.25 per tick.
Yeah, no, great trade. Not too many people caught that trade last night, so it was another notch in your
Well,
belt.
thank you. That's very kind.
But if you could squeeze it up here so we
sure
can
will,
see
yeah.
how it really looks.
You want to just go to a daily, or you want to keep it on 30 minutes?
Yeah, and this is all part of the bonds. What I've been saying about the economy getting better. There's no way those bonds would be actually the swings have been much more dramatic than we thought. So we came back up from that. Remember, we had that big decline. Look, from late August. Look at that, from late August through September, right?
Mm-hmm.
When in other words, whatever the Fed said, at Jackson Hole, certainly was interpreted by the bond traders that the economy is going to get stronger, right?
Right.
Otherwise, interest rates wouldn't be rising. And then there was something happened, I guess, mid-September. That was when the market tanked. Remember that?
Right.
And we said sometimes, the first couple of weeks of September, first week, can give some idea of where we're going. Usually after Labor Day, if the market's sort of up, it's kind of like January and the rest of the year. So we stumbled a bit here with some weaker data, probably caused the bonds to rally, but now they appear to be turning down. If you could get a lot more history in there.
I sure can. In fact, I'll go with the continuous chart.
So that chart is starting to look like it might actually tank, because the measured move from 167 down to 158. That was remember, this was a big move historically. This was as big a move point wise. And remember, we were much lower in 1987, but it was as big a move point wise from May through October that caused the 87 crash. In other words, that rise, the points would have been much lower, probably from 100 down to 90 or 90 down to 80. So 90 down to 80 was a very big deal back then. Okay, in terms of points.
A measured move, John. A 100% Fibonacci extension from this high that you just mentioned to this low would take us down on the bonds to 154.25.
Right.
Measured
And
move.
if you could squeeze up again the data, because you're talking about a major trend line here. If you go back to 2016 and look at the highs and see where we are with the whole picture, we just might be.
Here's 2016.
Yeah, look, we're not breaking down enough yet to say that the bull market is over in bonds, or the secondary bull, the recovery bull, because it's quite likely. Remember, some interest rates today are making all-time lows, almost, right?
Okay.
Including mortgages and things, but obviously from the bond standpoint, the 2016 high was a very big deal. And it just shows you how slack the economy was before Trump came in, right? Now, so, you had a very, very strong, strong kind of a recovery up until October 18 last year, about a year ago. We had a year-long rally. Maybe that's enough now for the bonds to maybe start a new leg down. And if we did get back down to 136, before the election, I think that you'd see more red in 2020. So it could, and look, it's interesting. Look at maybe you can just put the dollar in on the same time frame and see what it looks like from October of 18.
Let me jump over to my other charting platform here. All right, let's get bonds up first. Okay, here's bonds. Bonds versus the U.S. dollar.
Well, no, I think let's just put the bonds up first, and then
right.
and then put the dollar in to see what it looks like from October 18.
So here's bonds. Now there's a way on this thing. Hang on, I'm gonna add the dollar. DXY. Will it let me do that? Sure enough, did. Okay, so now that's monthly. You want me to switch this to daily, or?
Is it monthly on both?
It's monthly on both.
Okay, well look, the dollar has gone up. Okay, the dollar has gone up with the bonds, and today the dollar is going down with the bonds as well. So, you know, if the bonds go down, the dollar is going to go down. It's just the way the world works. That's what happened in '87. For anybody who didn't know,
look at that. Now we're really getting some clarity here. Look at this.
Yeah, the dollar went into a death spiral. So back then, and so, you know, today the strange thing is that gold is down and the dollar is up. The dollar is down, rather. Gold is down and the dollar is down. But that may change in the next few days. But definitely the pound today is stronger. The Swiss and the euro are the Swiss for some reasons not very strong today, but pound is very strong. The dollar, the Canadian, Japanese is weak. So it's not a kind of a synchronized move in the currency.
Go ahead and finish that.
But you can see, I think from that chart, you know, if and this could be a very, I mean, look, if that thing goes down to 10%, where it says 10% there on the bond chart, you know, you can probably see that dollar breaking entirely this uptrend, and that could be pretty significant. And it would be very, very good, because it would be the beginning of what I was talking about yesterday, you know, which is higher stock prices. And I mean, look, if the bonds going down for a while are very bullish for stocks, but if the bonds go down too much, then at some point, you know, you have a divergence. You know, bonds can't go down forever and stocks go up together. At some point they go to an extreme and they invert. So you know, but for the next year or so, if bond prices were to fall, and pretty strong likelihood of that now, considering we're 9 months to 10 months from where we were in January when the liftoff was just starting. You know, and there may be a lot of other factors that will drive the economy in the next few months. I mean, how do you know we're not going to get a stimulus bill or something, in spite of everything, sometime in the next few months? So, and just look, just a slowdown. Remember, most of the European economies are virtually dead. Even, you know, they're slightly negative to, you know, bordering on recession. So if they start picking up and the rest of the world starts picking up, we could actually be in for a boomlet of sorts, you know, going into 2020, and into most of 2020. So it kind of fits the picture. But there's no way these bonds would be going down today if the economy is not starting to get better. I think you can take that.
Let me show you this little piece of news. And hey, Dr. Tom, welcome to the show. Glad to have you with us. I want to show both of you guys this little piece of news that crossed my desk this morning, thanks to some of my friends in Africa. Declassified emails reveal NATO killed Gaddafi to stop Libyan creation of gold-backed currency. Now, I don't think this is conspiracy theory. Declassified emails reveal Gaddafi was brutally murdered because France wanted to maintain their financial stranglehold on African nations. One of the over 3,000 new Hillary Clinton emails released by the State Department on 2016 New Year's Eve contained damning evidence of Western nations using NATO as a tool to topple Libyan leader Muammar Gaddafi. The NATO overthrow was not for the protection of the people, but instead it was to thwart Gaddafi's attempt to create a gold-backed African currency to compete with the Western central banking monopoly. The email sent to the Secretary of State Hillary by unofficial advisor and longtime Clinton confidant Sidney Bennett had the subject line, France's client and Gaddafi's gold. The emails indicate the French-led NATO military initiative in Libya was also driven by a desire to gain access to a greater share of Libyan oil production and to undermine a long-term plan to supplant France as the dominant power in the Francophone Africa region. Now, it says right here, most astounding is the lengthy section in this email delineating the huge threat that Gaddafi's gold and silver reserves, estimated at 143 tons of gold and a similar amount in silver, the threat that posed to the French franc circulating as a prime African currency. I have many questions, but one is, where's that gold and silver today?
Yeah, good point. And you know, Gaddafi was a pretty smart guy. I mean, yeah, intellectually, he was
he was a real fashion plate too. Good Lord, that's a lot of colors for one man. Yeah. I mean, I guess when they say he's a person of color, good Lord, there's a lot of color there. So. Anyway.
But he really was intellectually a pretty high IQ guy.
I don't know a lot about him.
So so for him to kind of figure out that he had a potential to as it says there, to create to disrupt the monopoly, it was obviously that somebody got somebody's attention and
myself, along with a few other 100,000 people. We're in the business right now of creating our own currency backed by gold. We'll talk about that later in the show today. Dr. Tom, welcome. Glad you could join us today.
Hey, thank you. As I came on today, I heard John talking a little bit about the Brexit, which coincidentally, last week I sort of laid the foundation talking about the political aspects.
John and I were talking about yesterday about the conversation we had last week, Dr. Tom. And you had a question for me, John, when I told you that Dr. Tom laid out how the Brexit would affect the rest of the world. Your question to me, I believe, was, well, what did he say about how it would affect gold? Dr. Tom, go.
Well, that's what I'm going to talk about today, the financial implications of Brexit, and put together with all of the other aspects, how it's going to cause disruptions, confusion, uncertainty in the markets, not just in the UK, but also in the EU, to a lesser extent here, and to some extent the whole world. I believe that the overall effect is going to be both gold and silver rising pretty dramatically.
Well, you remember, Dr. Tom, because you didn't hear this, I was pointing out the fact, because where we are at the moment with the gold and silver, a little bit less because of what's going on today, but certainly yesterday it looked very strong, and it looks to me like there's something out there we can't put our finger on just yet that could drive gold up $200 or so, and maybe silver up into the low 20s pretty quick. And Paul Tudor Jones a while back came out with his 1700 numbers, so I wouldn't want to bet against him. But there's 4 or 5 things that could make it happen. Remember when Christine Lagarde got announced, gold basically went up $100 very quickly. So when she actually takes the post,
when is that,
the reality of it, I don't know yet, okay. but it's pretty soon. That could be a big deal. Secondly, Brexit, the vote, when the Brexit vote happened, gold jumped about $100 in one day. So the actual reality of leaving the European Union could be much greater than that, could be hundreds of dollars.
And the stock market went down that same day.
Right. So there could be big currency fluctuations relating to Brexit. And then there's these trade deals that may get announced one by one right after. So there's a lot of factors that could push things around. But certainly, you know, given what's going on with the pound today and the currencies rallying and the dollar starting to turn down, if the gold spends the next couple of weeks sort of rising in anticipation of the Brexit, gets up to about 1550 or even a bit higher, and the silver gets to 19 or 20, it lessens the distance it has to go in reaction to Brexit, where there could be a sudden and, you know, distinct. I mean, look, it's like when something really big fundamentally happens, there's a big gap. You know, there's usually a big gap. So if we're all caught by surprise and there's a $50 gap in gold and a $2 gap in silver or something, that could be exactly what might happen.
Well, I find it fascinating how accurate you guys are with the charts. I pay more attention to the gold than anything else because I don't trade anything else. But and I know that the charts reflect some fundamentals. Some technicians don't believe that. You know, they think the charts are the charts and that's that. But the fundamentals, especially the people that get word of what's going to be happening ahead of time and they start trading off of those definitely affect the charts.
Sure, the fundamentals are everything. All known data is really in the charts at the time. You know, most of the time. Occasionally it veers off, but you know, the charts, the setup in the charts. And by the way, because I haven't really gotten the chance to get there today, there's several very profound things happening today to complement the bond decline, that are pretty bullish, economically positive. Number one, we've been talking about this. We called the bottom of copper a while back down at 250 or so, or even was it 250 or 240? I forget. It was pretty down there. We're up 4.5 points on the copper today, so that's kind of bullish for the economy. We're at a new all-time high in palladium today. That's potentially a very bullish leading indicator for gold. We're up big on the platinum today. We've been talking about the platinum since that last. I mean, the bottoms in platinum have been very difficult to pick because this one, you know, the platinum fell off a cliff, came down to the 830 or so level. I think it was low 800s or even a little bit lower. And I said, you know, this is a little bit like the beans. You know, when the beans had that first rally and then they fell off a cliff, came back down, sort of turned in midair and went back up. That's kind of what the platinum has done here in the last few days. Generally speaking, when platinum starts leading the way higher, it's a leading indicator for gold and silver to pick up. So given what's going on with copper, platinum, palladium today, possibly this, in the same way the market dropped off last night and turned, maybe the gold could do the same thing here in the next few days.
Here's platinum, John, on a daily.
Yeah, it's I mean, you know, it's pretty hard to buy that thing at 875 and see it back up to 900 now, but having seen that, the odds of platinum going vertically higher, I think, are starting to be more likely, because with the palladium, if you put the palladium up, you know, palladium is potentially a competitor of platinum, and at some point the palladium is going to price itself out of the market in favor of platinum. Very possibly.
The blue line is palladium.
Right. So look at it, new all-time high today.
Yeah.
Right. And that's generally a leading indicator. Often palladium moves several days ahead of gold. So I would put buy stops above the gold market here to catch some kind of an upside move. And I think if we get above 15, 20, 25, where we were yesterday, you know, then the likelihood of heading up to 1540, 1550 would increase substantially. And if we do get up there, you know, if we start, you know, anticipating the Brexit, and you see gold and rallying into it, that probably means there's going to be a big move on the actual news. And a lot of it, look, remember, it's an uncertainty factor as well with the gold, you know, because nobody really knows what's going to happen when this Brexit occurs. Personally, I don't think it's a big deal, but it'll all get worked out in one way or another with trade agreements. Eventually, they'll be pretty similar. The big thing is
it may be a bumpy ride for a minute, but it'll smooth out.
Yeah. The sovereignty issue is a thing that's going to be the big changes. But
I think Great Britain will become much more prosperous once they can break these shackles.
Listen, you can't, the Brits, it's like, it always fascinates me that, geographically such a small spot on the planet literally owned the world at one point. The sun never set on the British Empire. And, the Brits were formidable financiers and financial traders and warriors and conquerors, in the last 500 years.
In that same vein, look at the intellect and innovation that has come out of such a small place called Israel.
Right.
Unbelievable. Absolutely. Yeah. If that's not the hand of God, I don't know what is.
If the British didn't learn anything else from the American Revolution or the Ameri-exit,
that's pretty good.
If they didn't learn anything else from that, they saw, it caused financial turmoil here in the States initially because everyone was worried about, well, hey, Britain's our only trading partner and so on. But what's happened? We've gone on to become the leading economy in the world. So they should take heart from that. And I think that once they have their sovereignty back, once they control their own affairs, something like 80% of the laws that govern people in the UK today come out of Brussels. 80%.
Yeah, that's crazy.
And most of them are onerous. They're onerous rules and regulations that keep businesses from being successful.
Yeah, that's why they want out, and that's why the whole European has gotten bogged down with bureaucracy. I mean, I know because I had a sister who worked for the European community from day one, and I mean, she's living on a pension, unbelievable pension for the rest of her life. It's just amazing,
I mean, it's a good pension.
Just happen to be there. Yeah, exactly. Okay.
Well, 9 days from now is going to be a big deal, okay? Because this is the day, the 19th, that Parliament has said to Boris Johnson, if you don't have a deal, then you have to apply for an extension. Well, there's already been 2 extensions, and he said, I'm not going to do that. We're leaving, deal or no deal, on the 31st of this month. It was supposed to have happened back at the end of March. And I hope he sticks to his guns.
Yeah, as I said yesterday, Tom, there is something afoot. Sometimes when there's a big blow up and there's sort of no chance of any kind of a breakthrough at the last minute, I actually think there is a breakthrough, and the pound is telling you there's something.
I wanted to bring up the pound. You mentioned that earlier.
So I think because the big problem is the Irish border and how they're going to fix that, or live with it, or whatever they're going to do with it. And that is a very decisive move today in the pound. And look at the doji there yesterday, Dwayne. See that?
Yeah.
And look, it's a little bit like if you look at the beans, go back and look at the beans, like when we made the bottom area this year, this thing looks like exactly like the beans, so because you remember that big spike that happened on the beans, and then there was kind of a retest, and then it took off. It looks very, very similar.
Okay, here come the beans. Let me put on a daily. Hey, Dr. Tom, a few minutes ago, you talked about the different types of people that look at charts and see what they see. What I would add to that is most people, I think, they hear the news on the TV or the radio, so they go to the chart, to see what's going to happen because of that news, right? Would you say that's fair?
Right.
I, on the other hand, I look at the chart. I see what I see in the chart. I then go to the TV and wait for the news to come out. And John and I have talked about this before. This market it's eerily intuitive. Don't you agree, John?
Yeah.
I mean, you can sense it in the chart. You can, like John just said, something's coming. Now, I don't know if it's something wicked this way comes or something good this way comes, but something's coming. Here's the beans daily.
Yeah, it's amazing. When I used to trade,
see, Dwayne, you see that? Sorry, actually, we need a bit more. What?
Sure.
What? Can you put the daily on there?
This is daily.
Yeah. You see, does that look like the pound or what? Look at that bottom. Look at that bottom there in May, right? Look at the big lift off and then the pullback, and then what happened?
Let's do it this way.
And go back
over here.
pound.
I got the
Look at
pound.
that.
Let me just add the soybeans to this chart. Okay, now am I getting that right?
It's a little hard to see. No, if you take the soybeans off for a second and just compare the two charts, as you had that definitive bottom there back in September, right?
So
or the last day of
I'm going to
August.
create a separate soybean chart here. Hang on. I increased my font size on my screen, and sometimes I can't see everything on that screen. I just need to grab this full feature chart. There we go.
I see things great. I've got a 55-inch television here as my monitor.
I just drug up onto my 55-inch monitor on the wall. Okay, so here's soybeans, and that's soybeans on a daily. And the pound.
I mean, there's a lot of similarity in those two charts. The pound came back a little bit more than the beans.
Okay, soybeans, pound. Yeah, okay.
No, okay, go back to similar.
To
yeah.
Okay. With my data.
Can you? Yeah, I think we. Yeah, that's what I'm looking for. See that? It's a little bit over a longer time span, but look at the bottom on the beans and then the retest and the lift off. So.
Yeah, I got you.
Yeah, that today is a very decisive move, that for sure. That's a like I say, it's a long time since we had a 2-cent move in the pound.
Oh, and the monthly agricultural numbers, are they going to come out tomorrow or Monday?
I think they came out today. Check out the corn and the wheat.
When you guys finish talking about farm products, I'd like to ask John a question about palladium. Okay.
Okay. All right. Here's corn, John.
Yeah. See that downturn?
I was looking for a move higher, quite frankly. Well, that's what we discussed the other day on the show.
Yeah. And the same with the wheat. Not too bad on the wheat.
Okay.
They gave back all of yesterday's gains. Remember the huge gains we had yesterday, and then bang.
Ag report. U.S. reports. Okay. USDA raises corn yield projection, lowers corn, soy crop estimates. Now that's dated today. So the report came out today. That's what you're saying, John? It typically comes out on the 12th. All right. Yeah, here it is. Yep, it came out today. Corn production for grain is forecast at 13.8 billion bushels. I got to step away for 1 second. Dr. Tom, ask him your palladium question, okay?
Okay, great. John, the way I always classify them, the precious metals, there's 3 different things that give them value. One is their, if do they have a monetary use? Another is do they have an industrial use? And another is do they have a decorative use? Like jewelry and vases and things like that. So gold and silver are the only ones of the precious metals that have all 3 uses. Platinum to me comes in next because it does have decorative use. There's a lot of platinum jewelry and so on. but it's never been used as money, except there've been a very few coins issued in platinum, but they were just anomalies. They were just showpieces, so to speak. Rhodium and palladium and so on, strictly industrial. They've never been used as money. They've not to any extent at all as decorative products. So my question is, why would palladium be even nipping at the heels of platinum? Because maybe it's just that I don't understand. Maybe that palladium has more industrial uses than platinum that I'm not aware of.
It's used in the catalytic converter, and I think that from the way palladium's been going the last couple of decades, it would appear that it's the preferred metal for use in catalytic converters. In other words, they're willing to pay more for palladium because it does a better job. However, I think if palladium priced itself out of the market, if it gets to 2,400 or 3,000, they might go back to platinum, or they might use more platinum in the future. And then there's also the question of, China, other countries adopting the catalytic converter. So that there's a potential that may be another reason why palladium is making new highs. The other thing is shortage of supply and limited supply. Russia's the main palladium producer, and they may be restricting supply, like rare earths in China, same sort of thing. So, I'm sure Putin's happy that palladium's making new highs today, and he'd probably like to see it continue. So there's that. And then I think there's a bit of a decorative thing with palladium as well. So it kind of fits the picture in terms of being similar to gold and silver and platinum.
Okay. Well, that's interesting. I knew that both platinum and palladium could be used, but I just figured that palladium had come into favor because platinum was so expensive.
Well, that was the case. The interesting thing is palladium was very strong at the beginning of the 2000s. And then I think it topped out and started going down, and platinum was all the rage, and platinum went as high as about $2,400. Highest precious metal price ever, actually. And that was in 2008. And then when we hit a new high in gold in 2011, the platinum was a negative divergence. The platinum didn't make a new high, which was negative. And then when gold started going below the platinum price, when the platinum, am I getting this right? When platinum went below the gold price, that was a kiss of death for that particular stage of the bull market. Now, if and it's distinctly possible, let's say we get up to 1900 on the gold or something like that, and platinum has another lease of life and starts a new bull market and becomes a challenger to palladium. In other words, you could have palladium and platinum both over $2,000 an ounce. That would be like rocket fuel for gold, in my view. So if platinum ever gets above gold again, it would be you better batten down the hatches, because we're probably going to multiple thousands of dollars in gold if that happens.
Well, I've certainly been loading up on gold. All the things I see happening around the world and in our stock markets and world markets, they're all saying to me buy. So I've been loaded up.
Well, and the other thing is, which we were talking about at the beginning of the show, which is what Fisher was talking about. Right now the debt is manageable, I guess, given the repayments are. Look, nobody wants to basically throw away $300 billion maintaining the debt, but that's a fact of life. But the future projections actually put the debt maintenance around $700 billion by 2023. And that is a big deal. That is going to, it's almost $1 trillion going down the drain. And that's at current rates. So if interest rates spike, and, based on our projections of the dollar going into it as in a mega decline by 2023, that's the bottom of the cycle, 23, 24, we could have a debt. I mean, the last thing on anybody's minds right now is interest rates spiking to 10 or 20%, but it's happened before. And, they may overramp the economy. And there's a logic to that, because in 2021, there's a very similar kind of a lot of what happened 100 years ago has happened in this era. And my explanation of that is the Industrial Revolution started around 1875, and basically peaked in the short term in 1930 and that caused a depression. And the technological revolution of this century, this era, this generation, started in 1975, and we're in the last third of it right now, and there should be a big rush of technological innovation over the next 10 years, which we all expect. Flying cars and jetpacks and things like that are probably going to be the norm, and I think we're going to see, probably in the next 10 years, we're going to see electrical generation, electricity, self-generating houses and things like that, one way or another. So there's going to be huge, and then self-driving, autonomous driving is going to be gigantic, because once it becomes mainstream, everybody's going to want it. And Google are very, very well positioned for that with their Waymo. They've basically got the upgrade all ready to go as soon as it becomes mainstream. So
I live in South Florida, where we have a thing called Century Village, which is mostly people from New York who came down here to die. You're young there if you're 75, and we have people have bumper stickers say, "Pray for me, I drive past Century Village." So a lot of drivers scare me, but the idea of the autonomous car scares me more, frankly.
When it becomes the point of being adopted, it'll certainly eliminate a lot of crashes and things. And there's people that don't want it to happen, like the car makers, because the crashes are good for their business. But it's almost like the same thing. They don't mind the cars being robbed because it's good for business too. But the autonomous thing is coming. All these things are coming, and the next generation of kids that are being born today are probably going to be by their 20s or 30s. They're going to say, "You mean you had to drive a car in the old days?"
Right.
But the thing is, there's a look with space, the space era that's coming. There's going to be so many unbelievable things happen. Medicals. Look, there's so many things going on in medicals today. I got a friend who's a cardiologist, and he says he can't believe the number of people that he operated on 10, 20, 30 years ago that are still walking around like, there's nothing. He's a stent guy and a heart transplant guy and this sort of thing, and he saved so many lives. It's just unbelievable. And so there are gigantic breakthroughs in medicine this day. They're just going to get better and better.
But when you put space and technology together, look at so many of the things that we have today came from NASA, and then Obama tried to kill it.
Yeah,
he actually tried to destroy NASA, which is insane.
Well, I think the biggest look, in a way, I guess, getting rid of putting the space shuttle program, ending the space shuttle program, gave rise to all this new innovation. But I think the space shuttle, eliminating that was kind of crazy. Again, having to borrow space rides from the Russians was very humiliating. And we might be using the next generation of space shuttles now, babies, the smaller one that looks pretty cute, things like that. They're probably all going there anyway. But look, you can't knock what Elon Musk is doing, and there's a lot of innovation coming out of the private sector. So but I think you're going to see an acceleration of innovation on a global scale, just nothing like it that's ever been seen before in the next 10 years. And unfortunately, the problem that's coming is, and it's about a decade away, is that the automation is eventually going to kill a lot of jobs. And that's going to cause the next depression, in my view, which is sort of like the 30s, the 2030s or 40s.
You know, all the McDonald's are in the process of switching over to restaurant models that don't have cashiers. They've already done it in France, in Paris, I think it is, and it's even the one near my house. They already have the big thing where you walk up to the order board, but they still have cashiers. But as they get this thing perfected, the cashiers are going to go away.
Yeah, yeah.
It's happened at every place you go. You go to Home Depot. They deliberately have very few cashiers available, and then they have these lines where you can go through and self-checkout. And they have someone standing around to help if you need it, or to make sure you're running everything into the scanner. Same thing's happening in the big grocery stores. Banks used to have the ATMs outside. Now they got them right there inside the lobby. People are expensive. And it's going to cause a huge. We're right now at full employment. You know, we haven't been like that for decades.
Yeah.
But you know, the more technology comes up, the worse. I want to go back to the debt just for a minute.
Yeah, what I was going to say, Tom, which is important, is that in 1921, the market was pretty in a similar situation to today, where it had doubled at that time. I think we've tripled almost, but it doubled from 2009 to 1921, and then it got cut in from 1907 to 1921, and then in 1 year it got cut in half. Now remember, back then the Fed were only 10 years old. So this was their first crisis, and they went in and they obviously pumped up the economy, and they pumped it up enough to last for the whole of the roaring 20s, and it was very positive for the economy. Maybe they pumped it up too much, because ultimately you had the 1929-32 crash. It's quite likely we're going the same way, and if we have something, there's some sort of accident out there that's coming, maybe in 21 or 22, or maybe even 20. That will tank the economy, possibly the Dow going briefly below 10,000, and gold could soar to maybe as high as 8,000 or 9,000. Could kiss the Dow, the same, equal the Dow very briefly for a day or two, perhaps, and then the Fed steps in, gets the Dow back up to 20, 25, 30,000, and then we go on for the roaring 20s. It's a really plausible argument that could happen, in combination with the fundamentals and the innovation period that's ahead. Well, and it would be in a gigantic trading opportunity, because if you happen to know about it ahead of time, I think whatever causes it to happen will be a monumental event of some kind of drastic consequence. So,
what was your question about the debt, Dr. Tom?
Well, yeah, as far as the debt's concerned, I mean, Andrew Jackson was the last president that left office with essentially no debt. It was like $15,000. Yeah, and everybody got upset when Ronald Reagan campaigned on reducing the debt, and he allowed it to go up to $800 billion. That was monstrous. Yeah. And conservatives were very, very unhappy with him.
Well, the thing is, if the debt does double or triple in this era, we get to $1 trillion debt maintenance. You can imagine the ramifications of that will be monumental, because it probably means interest rates are going to spike. You have your dollar could go down the drain. And that would cause gold to skyrocket, and for a brief period of time, it looks kind of like 1980. The gold went up to 8. If we turn the clock back to 1976 today, and gold's at $104.6, and I'm saying it's going to go to 875, you're very about ready to lock me up. But that's what happened, And the same thing could be about to happen again. We saw Bitcoin go from 3 to 14,000 in 4 or 5 months, and the equivalent of gold doing that would take us to 7,000, and that could be right around the corner. So
there's Bitcoin right there on a daily.
Well, I think gold goes to 5,000 even without a crash of the dollar, personally. But
yeah.
I just want to mention one thing about the debt. A lot of conservatives naively believed, because most conservatives believe that the debt is evil. It's bad for the country. I mean, I was furious when Dick Cheney made the statement, the debt doesn't matter. The debt matters. Okay, it's eating away at our national economy. But everybody expected that Trump was going to bring the debt down. But you got to listen to these guys. Trump never campaigned on that. I believe he realizes that the debt is a bad thing, but he's got other priorities. And so he's actually spent more money and hasn't done anything to make any moves to reduce the debt. So I don't think it's going to go up as much. It doubled under Obama. I don't think it's going to go up that much under Trump. But people that are looking for him to actually reduce the debt, they're looking at the wrong guy, because that's not what he promised. It's not a big priority to him as a businessman. He used debt as a tool all throughout his career. But if we ever get back to the place where we lose our AAA rating again, then China is going to come in and really eat our lunch. So that's why I can't remember. It was one of the chairman of the Joint Chiefs of Staff that said that the national debt is America's #1 national security problem, and he ain't wrong.
I agree. Hey, Dr. Tom, I know we've kind of almost run out of time here, but do we have enough time today for you to take the screen and go over what you wanted to cover, or do you want to postpone that to next week, or how do you want to handle it?
Why don't we do that? Because I need, at least half an hour, 40 minutes for what I have here. But I've enjoyed this. This has been fun.
And feel free to continue to hang out with us. So, folks, that's what we'll do with Dr. Tom. Is what we're going to talk about today. We'll do that next Thursday, and we'll just continue the conversation we're having right now. So.
Yeah, thanks. Sorry, I had to duck out for a second. Sorry to kind of postpone your show, Tom.
No,
that's okay. Like I say, it was fun. It's nice to get into discussions with intelligent people every once in a while.
Likewise. Look, you can almost feel this thing coming. It's sort of, especially given the way. I mean, look, to my way of thinking, the implications of gold getting up to 1,700 to 1,900 are very profound, because if we close the year anywhere near the highs of gold, the possibilities of going up next year are gigantic. In a follow-through year, you're going to have a big up year. Basically going to have an up year from about 1,200 to 1,700, a $500 up move. So what does that mean for next year? Does it mean another 500? Could it mean it could be a $700 up move? Could be a $1,000 up move. Even something more dramatic. This whole election thing, this impeachment. There's a lot of unknowns, and I talked about a third party getting into the race. Maybe that third party is going to be Hillary Clinton. Who knows? That could be worth a couple $100 in gold going up just like that. So seriously, I think that and just look, the fact that the Fed is back in an easing mode. What happens when think about this now. What happens when the Fed gets into an easing mode? They tighten too much. And they kind of, and when they tighten, it does hurt. It does affect the economy. But when they get in an easing mode, and we're in we're in a maxed out easing mode worldwide, like the likes of which we've never been in before. And then there's these repos of upwards of $1 trillion where this money has been pumped into the economy. The last time they did that in Y2K, we had a melt up. They did it in 99 and they had a melt up into 2000. There's the possibility of a melt up of everything, you know, stocks, and maybe the dollar will tank. Stocks, gold, the works, you know, the mother of all kind of run for the roses. Very possibly could happen. And if the economy gets stronger, it's good for all assets. But remember, they started stimulating in 08, 09. Where was the gold at the time? It was like 1,000, right? Or maybe 900, 800. In fact, back in 08, I think it got down to about 750 or somewhere, maybe 600. And it went to 1,900. It went up $1,300 from that low in just 3 years. Well, we're talking about 3 years between now and 2023. So, you know, 1,300, where would 1,300 put us? It put us up close to 3,000. So that's kind of what's on the cards. That's what's coming. And it may be much bigger because this is kicking the can down the road. I believe right now, I call this little the turnaround by the Fed, I call this kicking the can up the road, right? They're kicking the can up the road. Gotcha. If we get a crash, you know, literally a crash, be a worst crash ever. If we get the crash down to 10,000, you know, at the beginning of the 20s, sometime in the early 20s, 21, 22, highly likely, by the way, the odds of that happening, I don't want to disclose all my secrets, but I'm just telling you, the odds of that happening are just like, there was certainly the odds of a very serious correction in the early 20s is just like, you know, the odds are almost 100%, seriously. And
can I share something with you real quick here?
Sure.
Yeah.
Now, this is from, I'm not going to go to the whole background of it, but several different experts talk about a 70% correction in the stock market back in January. Mm-hmm. 2019 will mark exactly 10 years since the end of the global financial crisis in 2009. It will also mark the longest period of economic expansion on record, surpassing 1991 to 2001 internet boom. However, cracks have started to appear in the markets and fundamentals are not looking as strong as they once were. In 2018, stock market suffered their worst year since 2008. But even more important to me, this is not in the article, December was the worst December since 1929.
Yeah, it was.
But now several warning signs are starting to show red flags in the market, causing some analysts to predict a 70% correction this year. And we don't have a lot of year left. It could be, you know, this is written in January. It could happen early next year. But just two more paragraphs. This is fascinating stuff to me.
Yeah, no, you're right on there, Tom. Go ahead.
Increased volatility and rising interest rates are leading investors and economists to warn of an impending stock market crash. According to hedge fund manager Paul Tudor Jones, we have the strongest economy in 40 years at full employment. The mood is euphoric, but it is unsustainable and comes with cost, such as bubbles in stocks and credit. Scott Minard, chairman of investments and global chief investment officer of Guggenheim Partners, has forecast a 40% retracement, while economist Ted Bauman believes the market could fall by 70%. Finally, and this is, you know, I like this guy, the CIA's financial threat and asymmetric warfare advisor, Jim Rickards, claims that a 70% drop is the best case scenario.
Well, you know, I agree with all of that. And that's why I say that sort of kicking the can up the road right now could postpone what you're just talking about. It could literally stretch it out to 2020 or 2021, barring political developments, because obviously if there's any kind of hint of the Democrats winning, you're going to get that 70%er no matter what. But what I wanted to say is, I think that you know, the Fed, you had Yellen saying, remember, she said there was never going to be another correction. And this is sort of like the fellow in 1929 said, you know, it's only a one-day pullback or something like that. You know, I forget what he said now back in 29, but it sounded like, you know, Janet Yellen speaking the same thing so many years later, like the Fed's invincible because they thought they did such a job. I think they've got enough bullets in their gun if we do have that 70%er in 2021, 22, that they can get in there and kick the can down the road one last time. And that would kick off the roaring 20s. But the ultimate demise would be, you know, a similar 1929 type scenario in 2029, 2030, brought about by automation. And I think they might have to reset the whole world economy right after that. You know,
well, that's a great verified quote from Ben Bernanke. And he's talking about the financial models of the Fed. He said are normally very accurate. And then he goes on to say, the fact that they've been wrong in 14 of the last 15 years does not mean they're not invalid.
Yeah.
The Fed's financial models wrong in 14 of 15 years. And we trust them.
Yeah.
I don't trust them.
Yeah.
But
we're definitely, look, I think there's all the ducks, look, even the way we're looking at the charts today and the way we came back overnight and the possibility of a trade deal, etc. You know, we could be looking at one, and especially, look, the cycles, generally the fourth quarter of the third year of election is very strong. Most of the election year is usually pretty strong. So the odds of us having that kick the can up the road, final runoff, final blow off, could be, especially with all the money that's gotten pumped in, could be on the cards. But after this next top, forget about it. Because even if Trump wins, the second part of the second term is usually a disaster. It happened to Reagan. He had the crash of '87 in his last 2 years. It happened to Clinton. It just happens to all. It happened to Bush. Happened to all these second-term presidents. So that's really the way I kind of feel we're headed.
Yes,
you're right. So all this geopolitical turmoil that we have afoot, what do you think that's going to do with, what it's going to do with crude? Any thoughts on that, John?
I was just thinking about that, watching the crude actually pick up a bit here. And I think, you know, even though we're in kind of nirvana at the moment in terms of U.S. production, the worldwide picture, you know, there's been no new discoveries of any consequence here for quite a while in energy.
Is exploration still going on? Because, you know, with gold, they kind of stop exploring when prices come off.
You know, that's a very good point you just raised. The next 4 or 5 years, the actual output of gold is going to go down dramatically. It's going to go down by 50% from the mines over the next 5 to 7 years. I think that's why people like Sam Zell are buying gold for the first time in their life. So, and the energy, the lack of discoveries in energy, you know, there's a lot of, look, some of the Saudi wells are probably getting to the end of their life. A lot of Alaska, they've been talking about shutting down Alaska, some parts of Alaska. The North Sea is basically nothing like what it used to be. The only place where oil is actually, you know, increasing production is Africa, off the coast of Africa today, or in Africa. So there's a risk of, you know, even though we're moving towards electrification, we may not be able to get there quick enough to avert what could be in the early 20s a real short squeeze on oil. You know, there could be one more, you know, it's kind of like the 70s. I always said that we're in a larger version of the 70s right now. We had the first run up in gold in 2011, which I see as like 74. Okay, then there was a pullback to 76. This one took 5 years, so it's from 2011 through 2016. There's about a 7-year up move in gold and a down move in the dollar. And so the big blow off comes in 23, 24. And who knows? How do you know that somebody's not going to drop something on the Saudi production and knock it out permanently? Imagine that happening, or semi-permanently, for years. Something like that could happen. So it's sort of like the ultimate Goldfinger scenario, like where
one thing that's been happening for a long time now is them shutting down coal in this country. And, Obama promised to kill coal and so on. I just saw some statistics today that blow your mind. The 8 top coal producing countries are all increasing the number of coal plants that they have, every one of them. And together they have about 5,300 coal plants. In the United States, we have only 15 that have survived, which is insanity. If we shut down every one of those, it might make a difference in like 0.1% of the whatever it is they're worried about. What's the word? The carbon footprint or whatever. Yeah. It would be nothing, because there's 5,300 other coal plants spewing out coal, and none of them have the scrubbers and things that we've required of ours. China is the biggest polluter in the whole world. They don't sign on to anything to reduce.
One of you guys told me, I can't remember which one of you it was, that when Mount St. Helens blew up, that released more of the bad stuff into the air than mankind has since the beginning of history.
That was me. I not only read that once, but when something as dramatic as that, I tried to verify it as many places as possible.
Was it verifiable?
At least it was definitely verifiable. It was a huge release of carbon products,
and we're still here. And we're still here, despite what the new Democratic think tank says, which is AOC. She's the new Democratic think tank.
Well, the thing is, we don't have to worry about it much longer, because according to her, the world's going to end in 12 years.
Right.
So, don't get stressed out.
Exactly.
Listen, I have to say goodbye.
Okay.
Have had a great time today, guys.
Me too.
By the way, Tom,
yes.
just before you go, there's a news just kind of breaking here. We see a pathway to a deal by Boris Johnson, Leo Varadkar. Who'd have ever thought the president of Ireland had a name like that? But anyway, it looks like a deal is in the works. The pound just hit what, 124?
I'm bringing up the chart right now.
Oh, that's great. Thank you for letting me know.
Okay.
All right. Well, God bless you guys, and
look at that.
And everybody in the audience.
Okay. Thank you, Dr. Tom. We'll see you next Thursday. Okay. Bye-bye.
All right. Thanks very much.
Here's look at that, John. 30-minute pound futures right there.
Very, very big day.
Now,
so,
let me go back to the daily to put that move in perspective. Here we go. Here's daily.
Yeah. It could push this pound right up to 130, 134. It could go all the way. Definitely going to start pushing the dollar down somewhat. This could be the one that breaks the trend in the dollar, actually.
What is this doing to the dollar? Let's look at that. Coming down.
Big reversal. Big weekly. Big significant monthly reversal developing. Weekly. Monthly.
There's weekly on the dollar. And then monthly. There it is.
Yeah. I mean, look, you can see, we've talked about this before. Look at the downside on this thing. Imagine going down to 90 or 88 on the dollar. That would be something. In fact, it's a measured move really down to about 85, maybe even 82. The markets would skyrocket if that happens.
Mm-hmm.
The gold. I didn't notice this. The gold stocks. Here's the thing. This is the tough part of trading gold. Gold stocks are up today, and the metals are down. How'd you explain that? So
that is interesting.
Yeah, take a look at Newmont now. It looks like Newmont's ready. GOLD is looking the geo.
Right. When you're talking about Barrick, you're talking about Barrick.
Yeah. Yeah, look at that doji there on Newmont. I'd say these gold stocks are going to gap higher tomorrow.
Now, Barrick, GLD. No,
GOLD.
GOLD. Barrick, here we go.
Yeah, look, they woke up these dojis.
Yeah, they're almost identical.
Check out Royal Gold, RGLD. I think that's really on fire today. Look at that.
It's up against potential resistance. I mean, we got it here. Yeah. We got it here. Now, you said something the other day about a negated Head and Shoulders.
Yeah, the most powerful thing in the universe.
There's the shoulder, and we're just about to negate that thing.
Yep. Could mean we're headed about 150 on that thing. So.
Yeah.
Okie doke. Well, listen, great show. Thank you very much, Dwayne.
Thank you, John. Enjoyed it.
Have a great afternoon.
Talk to you soon. Okay, guys. All right. We're going to go to the Concierge Trade Alerts. I already gave you the overview on Logic, but let me give it to you one more time in case you weren't tuned in at that time. Okay, ready? All right. So this week, so far, with Logic 247, we've got 55 actionable alerts. 9 have been stopped out. So far this week, with still a day and a half to go, 16% of actionable alerts stopped out. There's 60 total, 4 never triggered. So that left us with the 55. Now that's Logic. Logic is the live, real-time, in the moment, as opportunity develops alert service. And let me just show you what this week looks like. We'll scroll through that, and then I'll pick apart the concierge for you. Now remember, the Logic is what follows you around the clock, around the world. It doesn't matter where you are on planet Earth. If you have an internet connected device and you're a CFRN passport holder, Logic will find you. Last week, week 61, we had a total of 53 actionable alerts. We've already had more actionable this week than we had all of last week. Last week, 3 alerts were stopped out, so that's 6%. Now, that's not an average number, that's just last week. The average over the past year plus is 20%. We began week 62 Sunday night, this past Sunday night, 6 p.m. Eastern. And I'm just going to scroll through S&P and the Dow. Thumbs up means it found the target. A red X means it got stopped out. And if you see the Z's, that means it never triggered. So there's the Dow and the Russell and the NQ, and there's crude, and there's gold, and there's crude again. We caught crude on the long side, and then we turned right around and caught it on the short side. Okay, now we're into Monday. So all of this was Sunday night. Just remember that most people don't even think about trading on a Sunday night. And I'm sure there's some would argue, well, you shouldn't. It's the day of rest. Okay, I recognize that and I respect that. But I can rest on Saturday night, right? I mean, my 24-hour clock. Okay, you got it. Okay, so into Monday, S&P, the Dow, the Russell, the NQ, gold, S&P, NQ, crude, gold, NQ, Dow, S&P, crude, copper. First stop out of the week was on copper. Russell, Euro. Now, you may notice something here other than a few red X's and a Z. Up here, all you see are thumbs up. Why would suddenly, after all those thumbs up, why would there be this grouping of X's just kind of together? I mean, look at the times. Now, this time's Pacific, so this would be 9:31 p.m. Eastern. Okay. That's 9:33 Eastern, 9:35, 9:37. In other words, this is in the span of a few minutes. We pick up 1, 2, 3 stop outs, and a no trigger, and another stop out. Why is that? Well, they say you find elephants in elephant country. And when the markets hit an area that becomes unstable or unpredictable, or there's just no follow-through, it's if you recognize it, and we'll help you learn to obviously, you know, I didn't recognize it perfectly here, but okay, so watch what happens. From 11:39 p.m. Pacific, I did not put out another alert until the next morning at 7:47 a.m. Pacific. It's still unstable. Okay. Here's where so many traders run into an issue. I'm going to apply the exact same methodology, strategy, which operates on the same principle, to all trades, all markets, all the time. I don't do, we don't do things one way with gold, another way with crude, another way with the S. Now, there are folks who will argue that, well, you have to treat them differently. You can't trade them the same. That's their worldview, and they're entitled to that, because that's their wheelhouse and that's their understanding. Okay, I'm not going to knock that. I respect that. That's how you see it. That's how you operate. It doesn't take any cheese off my macaroni if I see it and relate to it in a different way. The main thing I wanted you to see is that these stops here, majority of what has happened is, I don't know, I forget how many, what did I say, we had 6 stop outs, 9, whatever it was. What I want you to notice is that they're all grouped together here. Okay. Now, let's say you're a new trader, or you're learning to trade, and you're trying to do everything you can, you know, exactly as you're taught, at the very best of your ability, and you actually are doing it properly, right? So you get hit with this, and this, and this, and then this. All of a sudden, man, you're starting to question your ability to read the chart, to understand the indicators, and to place a high probability, low risk trade. Does this mean you suck, you're bad, you're washed up, you're no good, you can't trade your way out of a paper sack with a fistful of razor blades? No. This is the truth about trading. This happens. Nothing can prevent it except not trading. That's the only thing that can prevent this. I'm tired of being stopped out. I'm not going to trade anymore. We know that with any definable edge, whatever it is, there is going to be an unequal distribution of profitable and unprofitable trades. It would seem that they would average themselves out, but sometimes they don't. You could sit down today with a brand new strategy, brand new methodology, and you might have, 5 profitable trades in a row. Does that make you God? No. Because the next 5 doing the exact same thing, the next 5 may get stopped out. You don't know where the profitable and unprofitable trades are going to, you don't know when they're going to come or where they're going to come from. You have to have enough faith in your definable edge to approach the chart, and when you see it, you execute without hesitation. Most traders, when they switch from sim to live, they go through a case of the jitters, the nerves. They start making decisions a little bit differently than they were making their decisions in sim, and all of a sudden it's a conspiracy. The market's out to get me. The world's out to get me. God doesn't even like me anymore. Look what's happened. You have to get that stinking thinking out of your head, because if you let that infect you, you're going to miss this. If I had bought the lie that I could no longer trade because I had, 3 stop outs in a row, where would we be? We would be somewhere where we're missing this right here, clear as day, up on the chart. Look at that last green candle on crude. I had put up there $350 per contract traded, $350 per contract traded off this alert, times 3. Number 3 had not happened, as you saw when I put it up. And if it hadn't happened, I would have changed it to 2. But I knew what the high probability thing was. And whether that is what ends up happening or not does not change the fact that it's the high probability thing, because it happens more often than it doesn't. Otherwise, you couldn't call it the high probability thing. Back over here, scrolling, scrolling, scrolling. You never know when you're going to get stopped out. Obviously, the worst time to get stopped out is the first trade of the day, because that just kind of sets a negative tone if you let it. If you let it. You don't have to let it. Many years ago, when I trained salesmen, I would teach, new guy, first day, first week, has to take a couple no's up front. Okay, I can see you're getting your nose out of the way early today. So this afternoon you can have a great afternoon, a productive afternoon. Oh, is that what I'm doing? Yeah. They buy for a while until they realize what I really mean. Every one of these alerts is a unique moment in the market, a unique opportunity in the market. Because this one and this one and this one and this one and this one found their target has nothing to do with whether this one's going to find its target or not. And the fact that this one got stopped out has nothing to do with this one and this one and this one and this one and this one. And you follow me? You've heard it said, the biggest challenge traders have is the noise between their ears. Sometimes you got to just shut it down. Okay? You have to learn to intentionally detach yourself emotionally from what's happening on the screen. My traders, I don't want them dancing on the desktop on a good day, nor do I want them, curled up in a fetal position under the desk on a bad day. And because it feels so good when you have a profitable trade, it's hard to rein that in. And I'm not saying you shouldn't feel good, you shouldn't be happy, you should. Don't get carried away, because a red X is coming. What separates a professional trader from someone who is not yet, maybe qualified to carry that title is their ability to not be affected by what just happened, good or bad. Those of you that have been in the live training room and have watched Michael, just such a perfect example of not being fazed. If you know stop outs happen, and it's not just head knowledge, but you accept it with your whole being, then when you get stopped out, you're not shocked, you're not surprised, you don't get your feelings hurt, you don't question your ability to be a trader. Now, head knowledge and heart knowledge, two very different things. Okay, let's go to the concierge. If you didn't grab a screenshot earlier, you can grab one right now. Here we go. Went to the Dream Center last night. You guys have heard me talk about the young man, friend of my son's. He was homeless. We took him to the Dream Center to see if it might be a good fit for him. And oh my goodness, I've worked with people in similar situations for many years. That was what I did for quite a number of years. It's like he just turned 18. It's like he's been waiting his whole life for the Dream Center to show up. It's met so many of his needs. He had, I don't want to say, he was definitely not an atheist. He believed in God, but his relationship with God was pretty sketchy. Okay. He didn't have a lot of, he had no drive, he had no ambition. I know this because he told me. He said, my biggest problem is I got no drive, I got no ambition. There's really nothing I want to do except play video games. And I really don't care if I do that or not. Oh. But he's been there 2 weeks now, as of last night. Just the look on his face when I see him. And he was telling me about, now, at the Dream Center, you don't pay rent, and there's a program. I'm sure most of you have heard of and know about the Dream Center, but you have a job. I mean, you got to work every day, and you aren't getting paid for it, not in the coin of the realm, it's all the services and housing and food. His job's in the kitchen. I have never seen this kid speak with passion before. Last night, he passionately told me about his job in the kitchen. And all I could do was just sit there and smile. It's a miracle. It really is. The greatest evidence we have that Jesus actually rose on the third day is not the reports of a couple of hysterical women standing at the opening of the tomb. The evidence, the hard evidence that you could take into a court of law, that evidence is in a changed life. This young man's life has been changed. By me? By the Dream Center? Now, we both played roles in it. It's the hand of God. This young man is finding his place in this world. He was raised by two moms. He was adopted. He never had the benefit of a father figure in the home. I'm guessing one of the ladies wore the pants. I don't know, and I don't want to go there. What people do in the privacy of their own homes, not my business. He needed what he's getting right now. He's surrounded by strong men that are not ashamed of the gospel of Jesus Christ. Real men love God. He's learning that. He's flourishing in that. So, I said all that to say that's why I didn't get the concierge trade alerts out until 12:50 a.m. Eastern. Okay? All right. See, the art of storytelling is not lost on me. But it is a lost art. So hang on to it. Okay. I got a pop-up saying that I may be experiencing network connection difficulties. Well, hopefully you guys can still hear me, because I'm going to keep talking. All right? Okay. Let's go to the S&P first. Come on, S&P. There it is. All right. I did back up this morning before the show just in case I crash and burn again. Oh, remember the conversation we had earlier about the S&P? We talked about, it could just take off, or it could wait for the BB. It could go sideways and wait for the BBC to play catch up. Do we have catch up? Let's see. This is how we do it. Hang on, I'll be right back. And I'm back. Okay. So, if you missed the first part of the show, go back and watch it later when it gets uploaded to YouTube. Or if you're on YouTube, then I guess you did see it. So I want this to make sense. I want it to all come together for you. We were here. Show starts at noon. Actually, here's the 12 o'clock candle, Eastern. Then we came back to the weekly trading zone. I said, now that alone is enough to provide good support. When price approaches the zone from above, we expect it to be good support until it isn't. It has been. When price approaches the BBC from above, we expect that to be good support until it isn't. And then I said some crazy thing about a perfect world where we would go sideways for a bit, giving the BBC a chance to rise up to meet price, and that when they finally connected, we would say that's really good support times 2. Okay, now we still got a red candle. So we're not going to jump up and down. We're not going to dance on the desktop. But everything came together in a logical manner. Okay? In a logical manner. Hold on one second. Okay, and I'm back. All right. So, in that perfect world we spoke of, if you could jot down the address and send it to me in a text, I'd like to go there someday. All right. So we've got good support times 2. Does that mean we're going to rally? I don't know. What I know is this is as fertile an environment as you can have for a rally. Order flow will ultimately dictate whether price goes higher, because price is always trying to get to a zone. Now, we were on a journey here on the left side of this blue and climbing CFMA1. We were on a journey from here to the zone overhead. We hit an obstacle. I'm not even going to scroll left and explain the obstacle at the moment because I don't want you to lose sight of this. And then the dynamic changed. With this red candle, we could then see that price was attempting to pull back to the weekly trading zone, confirm it as good support before the run for the zone overhead, which led us into the discussion of the market potentially walking sideways, just, marking time so that this could rise. And then to see this thing just spike down and touch it, because it's almost like one of those, what do you call it, obsessive compulsive kind of things. It's sometimes it just like it needs to do it. So it did it. Do we now have, are we ready for takeoff? Yeah, we're ready. Okay. We absolutely, positively know what the next high probability move is. I'm going to tell you. Doesn't mean it's going to come to pass, but it is the high probability thing. 29.39. 29.39 to 29.43. There's a radio freebie. All right. I want price to get above the step line, 29.39. I know that right now we have a blue CFMA1 overhead. If we go sideways another candle, it could turn red. Either way, as we approach it, that could become good resistance. Okay? So I want to get above the step line, 29.39. I want to be prepared to take profit before I hit that blue or red CFMA1, 29.43. So from 39 to 43, that's 4 points. Now, if I have the wind at my back, if there's momentum to the move, it'll take me through this swing high. The zone overhead, 65. Price is always trying to get to a weekly trading zone. Well then, why 60 and not 65? Because zones are an area. Sometimes they don't quite get there. So I'm allowing for that. So from 39 to 60, it's 21 points. Will it happen by the end of today's session? I don't know. You and your hard questions. I'm kidding. I don't. I just know what the next high probability thing is. That's for price to get above, and I'm always asking the market to go ahead, just prove it to me. Prove to me that you really want to go to the zone overhead. First step, get above the step line. Next step will be to get above here and here. So 29.39 to 29.43, and then, be aware of your surroundings. Look around. Do you have a horde of buyers behind you chasing you up the chart? Stay with it. If you're running into some big resistance, take your profit or tighten your stop up. Now, let's say you tighten your stop up real tight, you get taken out. Well, you got taken out with profit, which is a good thing. Now just let the market work itself out. Let the market get above this hurdle, this obstacle. You can jump right back in. Ride it right on up to the zone. Now, that's my best way of explaining. Can you see me break these alerts and swing trades and all that into segments? Okay. So, am I saying that you should definitely get out at 60 and not hang in there to 65? Depends upon market conditions. At the time, that becomes a real question. Follow me? Okay. All right, so last night, concierge trade alert on the S&P, consider being long, 29.25. Target, 29.33. 8-point move. Here's what I mean about having the wind at your back. Right here. We flew through the zone. What happens when it's called the slice? Only 3 things happen at a weekly trading zone. Consolidation, rejection, and the slice. When we slice through a zone like it's not even there, what we expect to happen next is for when that initial move that slices through is over, when it runs out of steam, we expect to see price pull back to the zone. You see, it failed to be good resistance on this candle. Okay, well, can you be good support? We pull back, we confirm it as good support. That gives us a 20-point move from the entry to the target and beyond. Okay? As we move up the chart, first obstacle, second obstacle, boom. So when price, if and when price gets to 60, if you have momentum at your back, if you're printing a green candle, if you're in a long trade, I don't recommend ever getting out on a green candle. I mean, it's green, it's going higher. If you're in a short trade and you're printing a red candle, why get out? Why get out before the chart? Well, because that guy said, I don't care what that guy said, even if I'm that guy. Let the chart dictate your behavior, not somebody's opinion or big idea. Okay? All right. I'm going to have to move through the rest of these pretty quick. All right, we'll go to the Dow. Concierge trade alert said to consider being long 26,340 up to 26,375. It's a 35-point move, which turned into a 200-point move. Imagine, if you will, you're in this alert, right? You traded this alert. You ripped through the target at 26,375. You could hurt yourself trying to get out of a vehicle moving that fast, right? Keep all, how do they say that? Keep your hands and legs inside of the vehicle while in motion, kind of thing. You could have 35 points or 200. It's $1,000 per contract traded. Now, it's difficult to get out of the swing high or swing low. So let's look at a way to navigate that. Unfortunately, well, no, I'm not going to say unfortunately. Yeah. If you could get out at the exact swing high, 200 points. But that's difficult. So what you do on this extended move like this, you watch for your step line on a long trade to hook a right. You see how we move up, make a right, move up, make a right, move up, make a right, move up, make a right. But instead of moving up again, we just kept, we crossed. We crossed the CFMA1. When that happens on a long trade, what you're looking for as your exit signal, you're looking for the first red candle that closes below the step line. Some of you might call it this one. Some of you might call it this one. You didn't get out with 200 points, but you more than doubled that initial 35-point target. We've now pulled back to the BBC and the WTZ. That's the potential for good support times 2 We'll see what happens. We'll look to get long the Dow above the step line. Before we get to that red and falling, CFMA 1, and if we can get through that obstacle, then it's clear sailing right on up to the zone overhead. All right, Russell. Consider being long 1485 up to 1493. 8 points at $50 per point. It's $400 per contract traded. Important prices, important areas are almost always tested. Price tried very hard to get back below the trigger, but it just missed it. Swing low was 85.5. We would need it to go 84.9 to qualify. But what did it do? Came back down to the trigger, ran up again. Okay. All right. Gold. Gold, the trade alert was, consider being short, 1509. And here's 1509. Okay. The target is 1503. That's a $600 per contract move. But do you really want to get out of 1503 when you're printing this big red candle that blows right through the zone? Remember, only three things happen. Rejection, consolidation, the slice. Consolidation is the most likely, rejection is the second likely, the slice is the third and least likely, but it is something that happens. And when price slices through a zone, what do we expect it to do? This failed to be good support like we thought it would be. So now we got to check and see, is it going to be good resistance? So far. Had you stayed in it, the swing low, 1496.20. Let's see if we got an exit signal there. We did. Let's see how good it was. Your exit signal would have basically gotten you out maybe right below 1502. So would it have added $100 per contract? It would. Okay. All right, got one last market. NQ. Consider being long 7,700 up to 77.22. That's 22 NQ points at $20 a point. That's $440 per contract traded. But again, we ripped right through the zone. Okay, exit signal. See, right here. Here's where we cross over, and that's a green candle. So this is going to be the first red close below the step line. So the closing price of this candle, 41.50. Basically, it doubled. it doubled. Another 20 points, another $400. You got 400 here, and you left this on the table. You got out here. You get out the swing high, but you double the potential of the trade. Now, if you find any of this even mildly interesting, if you think any of this could potentially impact and benefit your trading, go to eminitrainingschool.com. eminitrainingschool.com. We'll put you into a 5-day trial. You'll have access to our trainers, our traders, our indicators, our alerts. We will treat you just like you were a CFRN passport holder for 5 days. No credit card required. At the end of 5 days, if you've enjoyed the ride, well, then you got to pay up. Okay? But we want to make sure that you have enough information to make a well-informed, intelligent decision as to whether or not this is right for you or you want to go a different way. Okay? eMini trainingschool.com. Good word for the day. Let's go. Let's do it. Let's find it. I got notes here somewhere. Let me find them. Also, during that 5-day trial, along with live training room, group training, you have access to me for a private one-on-one mentoring session. 45 minutes, you and I, together, alone in a go-to meeting room. You can look at my charts. I can look at your chart. If you want me to look at your charts, I can. So for 45 minutes, I'm yours. You can ask me any question you want. I'll do my very best to answer, show, teach, help. Okay? And if you ultimately don't become a passport holder or partner, there's no hard feelings. I won't be mad. I did the best I could. I tried to help you where I could. Hopefully you'll take that with you into the future, and hopefully you'll draw on it, and it'll be of some benefit. Okay? I invest my time and my treasure in people. I have found over the course of my life, that's where I get the best return. Okay. Good word for the day. I want to talk to you about peace. Against a backdrop of chaos that the world offers, I want to talk to you about peace. Finding peace. Real peace. Philippians 4:6 says, don't worry about anything. Instead, pray about everything. The peace of God is a wonderful thing. If you've ever experienced it, and I'm sure most of you have, and if you never have, please book a mentoring session so I can tell you about it and maybe help you find it. Now, you may have peace, you may not have peace. Hopefully you do. There are people around you, even if you do, who also need that peace. That peace comes only one way. When you commit your life to Christ and live by the principles laid out in Scripture. When you commit something to the Lord, you transfer every part of it from you to Him. Psalm 37:5. Peter writes in 1 Peter 5:7, casting the whole of your concerns, once and for all, on Him, for He cares for you. What a privilege. Now, you might ask, well, how do I walk that out? What does that look like in the real world? How do I actually cast all my cares on Him? Through prayer. I know we just did a series on prayer a couple weeks ago, but you can't ever talk about prayer too much. You can't ever pray too much. Pray without ceasing, Paul wrote. Don't worry about anything. Just pray about everything. As soon as you become aware that you're starting to worry and lose your sense of peace, take it to God immediately and leave it with Him. How many times, well, this will apply to some and others not. Depends on probably what kind of church you go to, if you go to church. You've gone to the altar. See, well, let me just give you a sidebar real quick. Last night at the Dream Center, there was people going to the altar. There was people laid out on the altar. It's that kind of place. It doesn't get any more real than that. Now, I grew up in a church where people go to the altar. And you all know I'm straight from the faith and all that. But now my son, when he was very young, I took him, my wife and I, we took him to a church where people went to the altar. Now, we've been going to a different church for the last 14 years. In their heart, people are still going to the altar. It's just there's not a physical, they don't go up and lay on the altar and cry like a baby. It's just, we're what's called a spirit-filled church. We're not against people going. It's just kind of almost a cultural thing, and you're going to find that in different churches, you know. So, my daughter, she's 12. She looked at me, and she didn't come to live with us until she was 4. But anyway, she said, "Hey, Dad, why are those people laying on the floor?" It didn't dawn on me. She never seen the Holy Spirit fall before in a place. Some are hooping, some are hollering, some just knocked out. She'd never seen that. My son starts grinning because he's the wise older brother, right? He's 17. He's seen it before. Well, Emily, let me tell you. But what a moment in time that was. Anyway, how do I cast all my cares on him, you ask? Through prayer. As soon as you become aware that you're starting to worry and lose your sense of peace, take it to God immediately and leave it there. I've seen so many people go to the altar with problems, with drug addiction, all kinds of things, and they pray and God delivers them. And as they're walking out the church at the end of service, their arm, like Jim Carrey in The Mask, their arm just grows, you know, really long and reaches all the way back across the church and grabs that thing, whatever it was that they were supposed to leave at the altar. Grab it. Because even though it's not a good thing, it's comfortable. Like that pair of old stinky tennis shoes. Oh my goodness, you walk into a room, everybody else leaves the room. But you don't care because those shoes are comfortable. What you take to the altar, leave at the altar. Don't give the enemy any help. The longer you wait, the greater his hold over you becomes. And you say, but I can't stop thinking about it. My cigarettes, my heroin, my prostitute, my gambling addiction, whatever. The trifecta. There's 2 things you can do. Number 1, give it to God. And just start to focus on other things. It's a learned response, one you'll have to practice daily. Paul writes, whatever is true, honorable, and worthy of respect, whatever is lovely and brings peace, think continually on these things. Philippians 4:8. In other words, just redirect your thoughts. Don't dwell on it. When the enemy brings it up, as Paul said, take all thoughts captive. Take it captive. Don't dwell on it. The devil may show up at your door, but you don't have to invite him in for tea. Number 2, find out what God says in His Word about your situation. Well, there's no drug addiction in the Bible. There's no divorce in the Bible. There's no murder. There's no robbery. There's no... Oh, yeah, it's full of evil stuff. Full of it. You aren't living out a situation right now that's not addressed. It might be called something different, but the spirit is the same. Find out what God says in His Word about your situation. Then line up your thoughts, your words, and your actions. Your thoughts become words, your words become actions, and your actions today are the building blocks of your tomorrow. It's like gravity and karma. You can't escape it. You can deny it, but you can't escape it. Now, if you'll do this, you will be able to not worry about anything and pray about everything. And that, my friend, will allow you to experience the peace of God, the peace that surpasses all understanding. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
There is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.